Distinguished speaker, participant, ladies and gentlemen, let us put our attention to the video of Manifesto Bank Indonesia Institute. And later than that, due to annual meeting IMF World Bank Indonesia that will be held in October 2018, let us present you Voyage to Indonesia. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, ladies and gentlemen. The Honorable Director of Bank Indonesia Institute, Ibu Arliana Abu Bakar, Financial Counselor and Director, Monetary and Capital Market Department of IMF, Mr. Tobias Adrian, Deputy Director, Asia and Pacific Department of IMF, Mr. Kenneth Kang, Deputy Resident Representative IMF Indonesia, Bapak Tubagus Feridanu Setiawan, and all the participants of Bank Indonesia Institute Open Lecture Series, Financial Technology and Cyber Risk. Participants, ladies and gentlemen, on behalf of Bank Indonesia Institute, I would like to take this opportunity to warmly welcome you to Bank Indonesia Institute Open Lecture Series, Financial Technology and Cyber Risk here in Jakarta, Indonesia. Honorable guests, ladies and gentlemen, without further ado, let us welcome the Honorable Director of Bank Indonesia Institute, Ibu Arliana Abu Bakar, to deliver the welcoming remarks. Ibu Arliana, the floor is yours.
Bismillahirrahmanirrahim. Our distinguished speaker, Mr. Tobias Adrian, Financial Counselor and Director, Monetary and Capital Market Development, IMF. Mr. Kenneth Kang, Deputy Director, Asia and Pacific Department, IMF. Bapak Tubagus Feridanu Setiawan, Deputy Resident Representative, IMF Indonesia. Participants from ministries, Financial Service Authority, universities, and colleagues from Bank Indonesia. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and peace be on us. First of all, let us extend our praise to God, since only with His permission and blessing we can all gather here this afternoon. I would like to welcome you to the 12th BI Institute Open Lecture Series on Financial Technology and Cyber Risk. Open Lecture Series is one of BI Institute learning program, which aim to share and discuss recent development and current issues in the area of economic, monetary, financial, and payment systems. The Open Lecture Series is dedicated not only to Bank Indonesia, but also to our external stakeholders, especially government agencies and academicians. We welcome research persons from various prominent institutions, such as IMF today, to present their research or studies in these events. Distinguished speakers, guests, and participants. As we have already been aware, we are currently living in the era of rapid advances in digital technology, which creates many opportunities as well as challenges. Financial technology, what we call Fintech, is helping enable enormous progress in bringing financial services to many people who have perpetually been excluded from the financial system. Fintech offers new choices for consumers in conducting payment activities, remittances, fund intermediation, and investment. One of the fintech innovation and major component in the fintech market is virtual currencies. A cryptocurrency is a medium of exchange, such as rupiah, and function just like cash. All of that makes different in their entirely virtual nature. These new currencies use peer-to-peer payment technology and encryption techniques to control the creation of monetary units and to verify the transfer of funds. These conditions results in an uncertain and risky financial environment. The next question is, how will the central bank respond to this innovation over the next coming years? How will the central bank manage its policy? Currently, virtual currencies still pose little challenges to the existing fiat currencies because they are too volatile and too risky. However, central currencies, because they are too volatile and too risky, maybe not really common in the current day. But central banks should anticipate if it many time or maybe one day in the future, these currencies it become easier and safe also to be obtained to replace the paper bill. especially in the remote regions. Virtual currencies could actually become more stable. Another issue is how the central bank protect consumers to the exposed risk. The virtual currencies are commonly targeted by hackers who commit fraud. Referring to the message conveyed by the government of the opening of the Fintech office last year, because Bank Indonesia have the Fintech office just last year, the regulation of Fintech should be balanced and proportional without having to inhibit innovations. The central bank, in this case Bank Indonesia, which in charge of maintaining financial system stability and the sound and safe payment system, would want to ensure that the growth of fintech innovation will provide optimal benefits for the community, and at the same time, it also will not increase vulnerabilities of the financial system. Distinguished speaker, guests, and participants, we are grateful today that Mr. Tobias Adrian here with us to present the topic on fintech and cyber risk. This lecture will give us insight on how would fintech influence the financial system and how should the regulatory respond to this development. I believe this lecture will provide us valuable knowledge and a better understanding of this topic. And before I hand over the lecture to the moderator, I would like to extend our special thanks to our distinguished speaker, Mr. Tobias Adrian, Mr. Kenneth Kang, and also Bapak Tubagus Feridanu Setiawan for the good cooperation. Thanks also to our colleagues at BI Institute who has arranged all this preparation, and also thank you to all participants that have taken their time to participate in this event. I sincerely hope that we have a fruitful discussion and feel contentment during the lecture. Thank you and God bless of all. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Ibu Arliana. Distinguished speaker, participant, ladies and gentlemen. To start our session on this lovely afternoon, we would like to invite Bapak Iwan Setiawan as moderator to lead the session. Bapak Iwan Setiawan is Deputy Director in Academy of Financial Stability System, Payment Systems and Currency Management in Bank Indonesia Institute. In his occupation, he conducting, teaching, researching, and actively involved in hundreds of seminars as speaker with expertise in payment systems, e-banking, cyber law, fraud, and customer protection. Previously, Bapak Setiawan working in the payment system and accounting department and involved in several very important payment system developed project in Bank Indonesia, such as electronic clearing system establishment, bulk payment concept, and electronic money creations. He was also involved in the drafter of Information and Electronic Transactions Act and Fund Transfer Act. Prior joining Bank Indonesia, Bapak Setiawan was a legal officer of Astra International Ltd. Bapak Iwan Setiawan earned his law degree from Gajah Mada University, Yogyakarta, Indonesia, Master of Law on Internet and Electronic Law from Monash University, Melbourne, Australia, and PhD on Electronic Banking, Fraud, and Customer Protection from Faculty of Law, Art and Humanity, University of Wollongong, New South Wales, Australia. So, without any further ado, please welcome Bapak Iwan Setiawan.
Okay, thank you very much, Putri. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and salam sejahtera untuk kita semua. Okay, once again, as Bank Indonesia Institute, I would like to warmly welcome Mr. Tobias Adrian from IMF and also college, and also all the attendees. For your information, we have probably mostly from internal of Bank Indonesia from several different departments. And also we have attendees from outside of Bank Indonesia. I see Marion from France Embassy, economist. I think from Ministry of Finance, from Bappenas, Deposit Insurance, and else. Okay, So the rules is probably we're going to have like one hour discussion. Mr. Tobias will be presented the cryptocurrency. Actually, that's the exact title of the presentation today: the cryptocurrency and the cyber risk. And after that, we're going to follow with the question and answer. And if we still have time, because we only have like 90 minutes on schedule, if we still have time, probably Mr. Tobias will also continue with the second presentation title, with the title of Global Financial Stability Assessment. But before we proceed to the presentation, I think it's better for me to read Mr. Tobias' CV first, so you know that we are very lucky today. We have Mr. Tobias here, considering that there are so many experience and knowledge that he has and ready to share with us. So Mr. Tobias Adrian is the Financial Counselor and Director of the Ministry and Monetary and Capital Market Department of the International Monetary Fund, IMF. In this capacity, he leads the IMF work on financial sector surveillance, monetary and macroprudential policy, finance regulation and management, and capital markets. Sorry, I'm not bringing my spectacles. He also oversees capacity building activities in IMF member countries, particularly with regard to the supervision and regulation of financial system, central banking, monetary and exchange rates regime, and asset and liability management. Prior to joining the IMF, Mr. Adrian was a senior vice president of the Federal Reserve Bank of New York and the associate director of the Research and Statistics Group at the Federal Reserve. He's contributed to monetary policy, financial stability policy, and crisis management. Mr. Adrian taught at the Princeton University and New York University, and he published extensively in economics and finance journals, including the American Economic Reviews, Journal of Finance, Journal of Finance Economic, and Review of Financial Studies. He research spans asset pricing, financial institution monetary policy, and financial stability, with a focus on aggregate consequences of capital market and development. Mr. Adrian holds a PhD from the Massachusetts Institute of Technology and Master of Science from the London School of Economics, a diploma from Goethe University Frankfurt, and master's from Dauphine University Paris. He received his Abitur in literature and mathematics from Humboldt-Schule Bad Homburg. Is that right? How I pronounce the pronunciation? Okay. So we can see from the CV that we are very lucky that we have Mr. Tobias here. Okay, Mr. Tobias, you have like 1 hour for present your presentation. If it's finished earlier, then we can just continue with the question and answer. Okay, without further ado, the floor is yours. Thank you very much. Give a big applause for Mr. Tobias.
Okay, it's my pleasure to be here. Director Abu Bakr and Deputy Director Setiawan, thank you very much for having me. It's really nice to be in Indonesia. This morning I put on my suit and as I stepped out of the room I was told, no, this is not right. You have to dress differently. So it's really nice. I would like to go to work every day like this. Yeah, we have the same colors. So this is wonderful. As you know, this is a conference that is kicking off what we call the voyage to Indonesia. So the annual meetings of the IMF and the World Bank are going to take place in Bali in October. And just to give you some background, for the annual meetings, there are around 15,000 participants that come every year, 15,000 participants from all over the world, including the central bank governors and the finance ministers. So it's a huge event, and we are all grateful for Indonesia to host it, and in particular for the Central Bank of Indonesia to play an important role in organizing this enormous event. So today I will talk about cryptocurrencies and cyber risks. My guess is that all of you have followed valuations in cryptocurrencies over the past year. You know, who knows what the level of Bitcoin is at the moment? Who knows what is the level of Bitcoin right now? You know. How much is it right now? Around. Yeah, it went down. So basically, the valuation of Bitcoin, which is sort of like the most popular cryptocurrency, you know, appreciated extremely quickly over the past year, and then these cryptocurrencies took a dive. And so they have become much larger in terms of market capitalization. So the total amount of investment in cryptocurrencies has risen enormously. And at the same time, there are more and more initial coin offerings, ICOs, in cryptocurrencies around the world. And so this is supported by a lot of technological innovation. So technological innovation that is really driven by computing power, right? I mean, so today our smartphones are more powerful than any personal computer that you could buy 20 years ago. And there are smartphones all over the world in many, many people's hands. And at the same time, you have cloud computing, which is also extremely powerful. So computing power is more prevalent and is becoming cheaper. And as a result, the technologies to undertake payments is changing very rapidly. And so what we're seeing today is really just the beginning of a development that I think is going to last over many decades, where the way in which we transact is going to change. I mean, today in Indonesia, the majority of transactions are done using cash. But you can see, you know, when you travel on the streets of Jakarta, you can see these Grab, you know, the Grab people on the bicycles. And they are using, I mean, this is all based on mobile payments, and I would expect that over coming years, mobile payments are becoming more and more important. And so my presentation today is all going to be about the benefits and the risks of mobile payments, as well as cyber risks in particular, but other risks as well. And then the question at the end is, how do we regulate this activity? I mean, we are in a policy institution here, and as policymakers, as central bankers, as regulators, we want to ask, how can you make sure that the regulatory framework is such that these changes, these technological innovations in payments can be undertaken that is benefiting the population and the economy broadly without generating risks, financial stability risks, cyber risks, and other risks. So let me start with the benefits. So why is there all this interest in these payments, in new forms of payment systems? And in particular, why is there interest in cryptocurrencies? So what we have seen, so the potential, and this is the driver of lots of innovation, the potential is that payments are going to be cheaper, faster, and more cost-effective. So one example of very expensive payment systems are remittances across the world, right? So migrant workers across the world rely on remittances payments on, firms like Western Union or so to wire part of their salaries back home to their families. And so this is actually a big part of international payments, and it's extremely, extremely expensive. It often costs $10, 10 cents on the dollar, or 10%, or sometimes even 20% of the amount that is wired internationally is paid as a fee. So it's extremely expensive. It tends to be slow as well. And so innovation in the payment system hopefully is going to lower those costs one day. We've also seen around the world that innovations in payment systems and innovations in fintech more generally have benefited broad populations, so have increased financial inclusion. So populations that were previously unbanked, that didn't have access to a bank, didn't have checking accounts, might have access to payment services and might even get loans through the mobile phone or through the computer, and that is fueling innovation in terms of business creation and economic activity. So this kind of activity can be simple, such as trading in the market or getting a loan in order to buy goods that you sell in the marketplace. And so it's basically a way to get a much broader fraction of the population to be banked. So this is financial inclusion. It's also potentially much safer, right? Because you don't need to keep your wealth in the form of cash. So cash can be stolen easily. And in principle, subject to relevant security, electronic forms of payments can be very safe because they can be stored electronically, and even if you lose your phone, even if you're robbed, people cannot actually get to your wealth because it's in electronic form, and you can access it through different means, through your cell phone, through a computer, or from different access points. And so in principle, electronic cash can be much safer than cash. Of course, it has to be protected against cyber risks, and I'm going to talk about cyber risks later on in the presentation. So another benefit of electronic forms of payment is what is called Know Your Customer, KYC, Know Your Customer, KYC. There is a big push around the world to make sure that payments are used for legitimate purposes, right? Of course, criminal activity and terrorist activity is operated through all kinds of forms of payments, through cash payments, but also through bank wires, as well as through these new forms of fintech payments. And financial institutions have a requirement to know your customers, so to know who is making payments transactions, who is transacting. And that is one way to control or to mitigate the risks of money laundering and terrorist financing. This is what lawyers call AML, CFT. So AML is anti-money laundering and CFT is counter-terrorist financing. So in principle, compliance is actually cheaper with the new technologies. Finally, there can be all kinds of new forms of payments for new services And we haven't really seen the end of all of this yet. So we see it in some forms, like in Indonesia, you see it in Grab, but in many other countries, there are different innovations, innovative ways in which electronic payments are integrated with business models. And there are entrepreneurs around the world. I heard this morning that in Indonesia alone, there were 1,700 entrepreneurs, internet entrepreneurs, that are working on related issues. And they're all trying to come up with business models where new technology is intertwined with a business model and is, in principle, enhancing economic productivity. So I think there's no question that there are potentially tremendous economic benefits from new technologies in the payments area. However, there are also risks. And we have seen some risks arising so far. At the moment, these risks are limited. They're limited because fintech, new technologies in payments are limited in size at the moment. They're not part of everyday operations for most businesses. For some they are, but not for most. And for the moment, the connectivity of, say, cryptocurrencies or other forms of electronic payment are not that connected yet to the rest of economic activity. But of course, that's only a question of time until these new forms of fintech, of cryptocurrencies are going to be part of many more aspects of businesses, and connectivity is expected to increase. And with that increase in connectivity over time, financial stability risks could, in principle, increase. So what we have seen for the moment is that in cryptocurrencies, it is possible to take on leveraged positions. So many crypto exchanges, right? So in order to buy cryptocurrencies, you have to have an account with an exchange. And these exchanges often allow you to take on leverage. Sometimes they allow you to buy crypto assets using credit from a credit card. And so that's a levered position right there, right? Because you're borrowing in order to buy an asset, which is a risky asset. So risks might be underpriced, and of course, the volatility of the valuations in cryptocurrencies is extremely high. We're going to take a look at that in just a moment. Secondly, there are cyber risks. So an advantage of electronic payments is that they're electronic, so that you don't have the paper cash, so you don't have to worry about paper cash being stolen from you. But of course, because everything is electronic, it is subject to cyber risks. And there are many sophisticated ways by cyber criminals to get at, to try, or either to achieve, or sometimes at least to try to steal money. The most visible example of that was the central bank keys of Bangladesh that occurred something like 3 years or so ago. Yeah. Do you remember? Does anybody remember what happened there? Yeah, do you remember what happened with Bangladesh? Anybody? Central Bank of Bangladesh? So basically, cyber criminals found a way to manipulate the SWIFT payment system of the central bank, and they put orders to wire from, so the Central Bank of Bangladesh held foreign currency reserves were the Federal Reserve Bank of New York. And they manipulated the SWIFT access. So this is a transfer system, an interbank transfer system. They manipulated the system in the Bank of Bangladesh to give wiring instructions to the Federal Reserve Bank of New York to wire over $1 billion into private accounts, first in the Philippines, and then they were quickly wired further on to Macau. And so they didn't manage to get the $1 billion because they made spelling mistakes in the names. And so the banks that were supposed to get the wire, they read these names and they were like, yeah, there are mistakes in the spelling. And so they didn't accept the wiring. But there was something like, I believe it was $80 billion or so that were lost for the central bank. And so this is one sort of like big example, but you know, every single provider of internet payments is vulnerable to cyber attacks. You might have heard there was a cryptocurrency exchange in Japan, which was called Mount Geox. This was at one time, a number of years ago, 4 or 5 years ago, was the biggest exchange for cryptocurrency. So these exchanges are basically where you deposit cash against cryptos, and that was hacked, and basically the currency was just stolen from the exchange and never recovered. So that's the second risk of financial stability, is cyber risks. And then finally, of course, cryptocurrencies increase the ability of criminals to undertake payments. And that's a little bit of a two-sided argument, because on the one hand, of course, all these payments are electronic. So in principle, enforcement agencies, like the police, can in principle track payments, but they have to be very sophisticated in terms of data collection, right? I mean, they have to be in cyberspace and track what criminals are doing. So in principle, it is traceable. So in principle, it's better than cash in that sense, right? Because cash you can transport without any trace or with very little trace, while any cryptocurrency payments are, per definition, traceable in cyber space. But of course, there are millions and millions of payments every day, and actually making sure that you're on top of who's doing what kind of payments, and to track down terrorist financing or to track down money laundering is challenging. It's challenging in the banking system even. I mean, I'm sure that the Bank of Indonesia has some sort of program to track criminal activity in the payment system. And it's hard to detect.